Welcome to this webinar about the duty of fair presentation of risks under the Insurance Act 2015. My name is André Meijer. The Insurance Act 2015 looks like a boring legal and insurance subject, but that's not quite true. I won't take you deeply into the small text of this law or insurance subjects. I'm going to take you in the next 30 minutes by the hand to give you a practical and simple guideline on how to get a new mindset on risk information, how to share that risk information in your company, and how you can avoid the financial pitfalls of this duty of fair presentation. So this webinar is not just for insurance and a legal audience. To the contrary, it's much more meant for the people who are aware of the risks in the company, and those are anyone working with tenders, project preparations and operations in fleet management and senior management. And having said that, I'm really interested in which discipline of this area you are working. Could you please give me that clue in the poll to tell me in which area of this field you are working? And later on we will share that with you to see what is the division between people in project engineering and insurance. At the moment I see that the project engineering is in a lead role, so that is really important. That's what I would like to see. And also a lot of people are working in insurance. Well, very good. For the people who work in insurance, they have followed the development of this Insurance Act over the past 10 years. And as I say, this is not going to be a legal advice, but it's more giving you a guideline how to work with that, how to avoid problems between insureds and insurers. So in the meantime, whilst you are filling in what sort of work you are, what sort of work you are doing, I would like to continue for the moment, and I'll give you a hint about the final score later on. Good. We go to the agenda. As I said, the Insurance Act is a law on contracts. So it's a contract law, and insurance policies are contracts between insureds and insurers. And that's why we have to look at which policies are in scope of this Insurance Act. The duty of fair presentation is a duty. You have to comply with that. And if you don't, if you violate that duty, then you are in breach and you're in big problems. And we also look what the consequences are of breaching this duty. What are the financial impact is of those breach for your company. In the meantime, I'm looking at my screen. Thank you very much. I will give you a few failure examples, because in the past already there was some sort of an obligation. It was not so sharply described as it is under the new law, but there was an obligation to disclose information to insurers, and in the past we've seen a lot of examples where that has gone wrong. You have to understand which risk information is important to disclose to insurers. We'll go through that. And to make that a little bit more easier, I will try to do a little change hats with the insurer game, so that you understand, looking at from the insurer's point of view, what you would like to know, and so you understand what you have to disclose to the insurer. And finally, sharing risk information. As I said, people involved in the planning, in project preparations and operations, they hold the key for a successful sharing of information, and that should be done internally and externally. So this is the agenda. In the meantime, we can try to do some intermediate interaction for and a Q&A session at the end. But if there are questions popping up, please put them in the chat room, and the team and myself will look at the questions. Yes? Good. Before we start, I would like to give a very brief introduction of myself. My name is André Meijer. I've been working in the marine insurance industry for over 50 years, and the last 16 years I worked for Aon Marine and Energy as a manager and a broker. And since 2015, I have the honor to be the chairman of Munis Technical Insurance Committee. And for the people who don't know what is Munis or who is Munis, Munis is the dredging mutual owned by the four major dredging companies in Holland and Belgium, like Boskalis, DEME, Jan de Nul, and Van Oort. Good. Let's go to the first point of the agenda. And I've made a little list of insurance policies that protect your assets and your capital and your liabilities. And my question actually is, if you look at the list below that, what do you think, which policies fall under English Insurance Act? So for the fleet, we have hull and machinery, we've got war risk, kidnap and ransom. We've got project policies like construction, all risks, and design liability, the professional indemnity, the PI policy. And we have the liability of ships, which is the P&I, which covers legal and contractual liabilities. And we also have excess liability policies like an umbrella. And whilst you're thinking of which policies would indeed fall under English law, you don't have to answer that. I'll do that for you. All of them. Yes. So those are indeed all important policies that fall under English law. And your question will probably be, why do I have to work with policies under English law? Why don't they fall under my local Dutch, Belgian, or any other local law? And to give you the correct answer to that, we have to go back a little bit in time. In 1900, at the end of the imperial century of the British Empire, the government of Great Britain ruled over more than 60 countries, representing 25% of the world's surface, 420 million people, also 25% of the world's population at that time. So England ruled the land and the waves from Europe to Singapore, Australia, Hong Kong, Brunei, Middle East, East, West, and South Africa. And a lot of shipping lines, hundreds of shipping lines carried millions of tons of cargo all over the world. And the insurance policies for those ships and cargoes were obviously done in Edward Lloyd's tea house in London, which is still the main marketplace for insurance, Lloyd's, and the companies working there. So even though the British Empire has disappeared and the Brits have done a Brexit, London is still the place with the largest insurance capital and the largest variety of insurance policies in the world. So that's why that is still the place to be. And as you've seen from your policies, they are partially or wholly placed in the London market. And even the foreign markets outside London, they work with the same conditions and with the same legal system of those policies. And the Marine Insurance Act 1906, which is inherited from that century, has now been replaced by a more modern Insurance Act 2015, not only looking at marine insurance, but also at all other insurance policies. As I said, it is a contract law. And we're now talking today about a part of this law, which is the duty of fair presentation. And this duty of fair presentation says the insured must disclose material information in a manner that is reasonably clear and accessible to a prudent underwriter. We will come back later to that, what that means in detail. But for the moment, I want to show that this is an obligation. And because the duty is a warranty, you have to do it. And if you violate that, if you don't comply with that warranty, you are in breach. And the breach of warranty is bad news for your policy. If the breach was made deliberately or recklessly, then your policy is void. It's worth nothing like old paper. But if the breach is made not recklessly or deliberately, then you're still in trouble. You got three options. If you disclose the information now, which you should have done in the past, the underwriter will say, look, if I'd known that from the beginning, I would have never accepted this risk. In that case, your policy is still void and worth nothing. You're not going to get your claim paid. If the underwriter says, look, if I had known this, I would have offered you different conditions, then your claim will be treated as if on different conditions. I don't know if that means you're going to get paid or not, but that depends. And if the underwriter says, I would have charged a higher premium, you might only get a proportion of your claim, because it will be in proportion relevant to the as if premium. Now you will understand that this is a one-sided statement that underwriters make, and it's highly debatable, of course. And therefore, it's an awkward situation, because it's hard to deliver the counter evidence to prove that the insurer is wrong or not correct. So, difficult issues, but the good news is that solicitors and lawyers will make a lot of money out of this, because there is no jurisdiction yet for this new law. So, if you breach, what is the consequence? Well, the consequence is you're not going to get your claim paid, but what sort of impact does it have for your company? And therefore, I want to look at the policies in scope. That's why I put them in the first place there. Look at the values that are at stake. If you take the Hull Machinery policies, the top values of the world's major dredging companies, they go over 200 million today. And some of those companies have offshore vessels going over even €1 billion. The P&I insurance, that's the liability policy for your vessels, covering legal and contractual liabilities. The pollution limit is $1 billion. We're talking about euros on the screen, but it's dollars. And which is also sometimes your contractual exposure. For construction or risk and design liability policies, we see, especially on the renewable energy side, a lot of EPCI contracts putting a large exposure for a liability exposure on contractors. And more frequently, we see €1 billion contract values. So there's a lot of money at stake, a lot of money at risk if you make a mistake on the duty of fair presentation. So from the money to the final impact. Well, you see the man with the empty pockets. Non-payment of a large claim will have enormous impact on your company's balance sheet. And if you're a listed company, on the stock market price. And of course, not disclosing really interesting information or information that the insurer wants to have, and you don't disclose that, that also affects your image and brand of your company. So you may think we are perfect, we never make mistakes, or what have we done wrong in the past? Here are a few examples to show you that there is still room to improve on risk awareness and sharing information, sharing that risk information. And the reason why it sometimes goes wrong is that people involved in project preparation and operations, and they are really busy and focused to make it a commercial and a technical success. But sometimes they forget that a number of the risks that they are running have been transferred to insurers, and the insurers want to be aware of those risks. They want to have access to that risk information, just like you want to know that. And so the sharing of risk information is very important. Now, the examples that I've taken are from the constructional risk segment, and the reason for that is that the construction policies have the most strictest wording for disclosure of project information, and the insurers, they really are insisting on the smallest engineering details. So, and for that particular reason, the construction policies hold the record for the most breaches and rejected claims. Well, the question is, why are construction policies so strictly worded? That's probably a consequence of a market situation. Some policies are easier to change the wording in the benefit of the insured than in this particular area. So the first example that I give you is a modified work. So it's an example where a modified construction method was used during the execution of the work. And if you read a little bit about what was the idea about pile driving changed to drilling, and you will understand that it is a much tougher risk to run. Also, when the construction period has been exceeded by more than a year and the contract price has been increased by 40%. And that makes it a totally different risk for the insurer to accept. He would have wanted to know this before he started. And that's the reason why he's not going to pay your claims. Another example is a non-communication in design phase. When the tender was up for engineering, there was a plan to do it in a certain way, and during that design phase, it was recognized that it should be done differently. Steeper taludes and concrete walls instead of steel walls. And that is also a totally different method of construction, and also an exceeded construction price by over 30%. And I mentioned the 30% because that is mostly the allowance under construction policies that you can maneuver to increase your building price. It's not so that you have to report any increase by 5 or 10%, but the allowance is given in the policy by 30%. Once you exceed that, then you are in breach of the duty of fair presentation. So these are two typical examples of, well, frequent flaws in risk awareness and of a changed risk profile and the reporting thereof to insurers. Having said that, what sort of risk information is important? Well, I try to sort of make one definition of it, or at least the law has done that. It's something that would influence the judgment of a prudent underwriter to accept the risk. So that is what he wants to know. What would he want to know from the risk? And of course, I think I'm not on the same page as you are. Sorry, I'll go back with my story to which risk information is important. Number one, well, it is more the legal part, but I'll try to keep it simple. The Act says, well, the risk information must be reasonably clear and accessible, and material facts and must be substantially correct. You see, I have highlighted the key words. And the pictured expectation of the risk, so his understanding that you create, must be in good faith, right? Then we go to the point where I was just talking about what information is important, something that would influence the judgment of a prudent underwriter to accept the risk. So the starting point, of course, is the insurer. He must be aware of what you're doing. He must be aware of the standard risks of your business, of ships, of dredging, of anything in offshore. So that is the standard thing. Reasonably clear means it shouldn't be spaghetti of data that you dump on his desk. It should be relevant for the risk. You should give him the information that he can see in one split second. Okay, this is what they mean. This is what I'm looking at. And not that he has to sort of find his way out in a whole dilemma of choices. It should be relevant to the risk and clear. Material facts means, well, it should be special or unusual facts that change the risk. So we, as I said, he knows what the standard risk is, and when does it change from a standard to an extraordinary risk? That's the information that you have to disclose. Extraordinary circumstances, so the specific risk why you take this insurance. This could be local political risks or other local things that are not standard, but that are particular for the job in the area that you're going to work. And something material for this type or of activities. So, for instance, derelict mines. That is the information, not the standard derelict mines, they come automatic in the cover, but you'll have to be aware if there's an extraordinary situation, you'll have to disclose that. Right. And if you say, well, that may be a little bit complicated, I will try this approach. Change your insurance mindset. Don't think like your car insurance or your travel insurance or your household insurance. Take a different view to your policies. And the question is, why do companies buy insurance? Well, of course, they want to protect their assets and capital. And if a CFO is looking at his capital position and is looking at the risks that he is running, he quickly comes to the decision that the risk for a loss of capital cannot be borne by the company. That's impossible. And so let's take the change role situation. The CFO puts up his contractor's helmet. Probably it was in the back of his Tesla lease car because he's not wearing it too frequently. And he tries to meet up with the insurer with the bowler hat. So he comes to the insurer and says, well, I've looked at my capital and my risks, and I would be happy to transfer my risks to you. And so the insurer says, well, blimey, quite interesting, brilliant plan. That's a good plan for me. So why don't you just make a picture of all the risks that you want to transfer? Because you're saying you want to transfer your risks. So which are the risks that you want to transfer? And then I'll fix it for you. And then we really come to the point where we want to head. The company that you're representing is holding all the information that should be known by the insurer. And that is the key for risk information. Recognize what the insurer wants to know, right? So the next time you are thinking, what sort of information would I disclose to insurer? Think, change hats. And in order to give you a little bit of feel of the position of the insurer, I've given a few examples. Test your abilities as an insurer. Question 1. Well, if you have a dredging fleet and 4 of those ships are going to work in an Arctic area and will be working there in a time and area which will be, well, normally considered as closed for trading or working due to heavy ice conditions, and there's a fair chance that the vessels will not be able to return to open sea in time, well, as an insurer, you start scratching your head and say, okay, maybe I want to review the ice reports of the Swedish Coast Guard, or I'll put special terms for salvage, or I'm not going to pay for delay cover under my policy because those ships may be blocked in ice for more than a half year. So if you are in a situation as an owner, you have to consider those questions of the insurer. And the other example I have is, well, dredging companies are regularly exposed to unexpected derelict mines, of course. And the war policy provides automatic cover for that. But let's say that as you are an insurer, one of your clients will do a job at the Paardemark, which is a famous World War I ammunition dump. Would you really like to be informed of that job? Or would you consider it as automatic cover? Well, the answer is that you would really like to know about the job. You would like to have a survey report. And just consider that information before you provide cover. And the third example is if you're a construction or risk insurer and your client will do a pile driving job on a mixed sand and clay seabed, but his principal has only given him a very limited and incomplete soil sampling survey report. Nevertheless, he wants to start tomorrow, and as an insurer, you will probably like to know that the report that your insured has got is inadequate. So it's worthless, and would you still accept the risk? Probably you would ask for a proper report and then consider accepting the risk. So these are simple examples that I want to give, and to give you a little bit of feeling as an insured. Think sometimes as an insurer, as an underwriter. Look at the risks from another side. Change hats with the insurer. That is my message. Good. Sharing risk information. We're going to conclusions already a little bit after those testing the abilities. If we look back, we talked about the policies in scope. We talked about the breach of warranty, breaching the duty of fair presentation, and we've looked at the consequences being non-payment of your claim, and what the financial consequences are for your company. So we've also looked at the lesson that people in operating companies really focus on success commercially and technically of the project. And they forget that they have transferred many of the risks to the insurance market. And they should be more aware that having taken on the risks of an insured, the underwriter really wants to have access to the same information as the company that he is insuring. That is imminent information that he needs to charge premium and to consider the risk. So in the beginning, I've looked at the disciplines that you are working in, and I emphasized that is, for me, very important to emphasize that people, anyone in engineering, operations, legal, finance, fleet management, senior management, everybody should be more aware of the risks and to understand what extra risk is above the standard risk. So you have to increase your level of risk awareness to understand and how to work with that. Sharing risk information, number 2. Well, once you have been aware of the risks, you should share them within your company. How do you do that? Where do you go to? Well, go to your insurance manager. They know exactly how the insurance program is being placed, and he's got the experience from the past with similar questions that you have or similar situations. So that should be done immediately, I think. And also, not just at the beginning of a policy, but also during the course of a policy. If you change your construction method or you change anything during the currency of a policy, just report that to your insurer. That is the important thing. And if I have a hint, if I can give you a hint, the relationship that anyone in operations or preparations or legal has with your insurance management, think of the relationship that you have. How frequently do you speak to the insurance manager about problems or potential problems or any other questions? So I would say give a little boost to that relationship with your insurance management. And if you do that, go to the insurance manager in time. In my experience as a broker in the past, I noticed that many insurance managers of my clients were notified too late by other departments. So keep a close watch on the clock in which stage you do that. Don't wait too long, do that in an early stage. For him, easy, and for you, secure. I also want to point at the role of the insurance broker because he's an important service and he's an important link in the service and communication chain of the insurance policy. He is the in-between man on the contract between the insured and the insurer. So his role is really important. And the broker should mirror the information that he gets from his client to his own records for those risks or for those companies, whether this will be dredging or offshore. So he holds a lot of information, and he should mirror the specific information that he gets to his records. And the other advice I have to insurance brokers is share the market submission that you make or this market submission that you provide with your clients. Insurance managers should really check that. They should insist on checking the broker's market submission. So he should avoid to get information lost in communication. There's a lot of information with renewals and other sorts of packages that have to be placed. Try to avoid anything getting lost in communication. That is really an issue. Good. Having said that, there's a new law. It's a wake-up call. It's a tricky law. The duty of fair presentation means that non-compliance can result in huge financial consequences for your company. So it's time for a new approach. Everybody's level of risk awareness should be increased. That's really an issue. Upgrade internal and external risk procedures. You have to comply with this duty. If you don't, you have a problem. So these issues are really important to you. Time for questions. Well, first of all, thank you very much for looking and listening to this webinar. You may have a few questions. What I've tried to do is to keep it simple, but if you have any questions, please put them up in the chat room. I will try to answer them immediately, and if I can't, I will do that later in an email. And if you have other questions in the future, why don't you contact your insurance manager? He knows everything about this law and the duty of fair presentation, but he wants your cooperation to make a good performance there. And well, to close, sort of important note, an insurance and legal webinar should be worthless if we wouldn't have a disclaimer, of course, and because everybody wants to cover his rear end. So what I want to say is, once again, thank you very much. It's the webinar is meant as a simple, practical guideline. It's not a legal advice. If you want the legal advice, you have to contact your usual solicitor. And the reference words that I used are simplified. The reference words to the Act. And if I would say, I would really recommend to read the Insurance Act for a full wording, and I've put a link on the screen, but there are many other links to that make it a little bit more easy, but this is the official one. Thank you very much. If you've got questions, please put these questions on screen, and I will try to answer them. And before we do that, I would draw your attention, if you want to get a free subscription of the IADC quarterly journal, the Terra et Aqua, which is a really very nice booklet. It's interesting, beautiful photographs, and a lot of effort has been done by the IADC people to make this a beautiful journal. If you want, click here. I'm going to look at the screen if there's any questions coming in. And then I have to use my mouse. Can I receive a presentation and watch the webinar again? Of course, yeah, it's going to be online, and you will receive an email with a link to that. Secondly, can you recommend some literature to read more about this? I would say that if you first go to your insurance broker, so ask your insurance manager, the brokers have lots of information. As I said, this law has been under construction for the last 10, 15 years, so a lot has been written, and the major lawyer offices, they do also presentations. Let's say they will really make it a legal approach. Even more boring than this one. The reason why my presentation today was a little bit boring was I've done this in the past, but I had all 90 cartoon pictures. but wisely decided by IADC, they skipped all the nice pictures because it was a typical copy-paste thing from the internet and not really legally well. So, but if you want information about this law, look at the internet. But I would recommend go to your insurance manager and your broker. They hold lots of information about this change. I've another question. In what time frame should the insurer be informed beforehand? Well, that depends very much. If it would be something that he could answer immediately, then it could be one day. But if it is a difficult problem and he should do an external survey or consult his reinsurance program, for instance, then I think it would take a little bit more time. I would say once you are sure that you are going to change your method of construction, for instance, or do any change, just send him a mail and ask him what he wants from you, what sort of additional information that you have to provide. At least he is aware of the fact that something is changing and you are in discussion with him. He can ask you anything that he wants to know. Good. There's a question about in a marine construction project, should both the owner and the contractor buy an insurance policy? Well, that's an interesting one. Before I answer that, I'll tell you what's going on. Normally, a principal, so the owner, so to speak, buys the construction or risk policy for everybody who is working with him and under him. So he buys the project policy. And in the contract that you have with him, it is stipulated that you will be a co-insured under that policy. Well, that's the good news. The bad news is that if you have a claim, then you have to go through your principal to lodge that claim to his insurers. That's a little bit of a downside, because if you have just knocked up his nice little work and made a claim of 50 million, he's not a happy fellow to support your claim. So that puts you in a little bit of difficult position. But that is what it is. If you look at the insurance policy that he made you co-assured on, which is, as I say, most cases so, you can look at the policy, and if you're not happy with the wording, if you think that you can buy a wider cover, you can also buy a difference in conditions construction policy. I think the people who are looking at the webinar are doing that on a regular basis. So, but it's costing extra money. So that is up to the insurance manager and the senior management to decide whether they will buy a difference in conditions cover or not. Another question is the Insurance Act of 2015 likely to affect insurance premiums? I don't think so. No. The premiums are driven by the market. So it's a matter of buying and selling that really influences the pricing, whether this will be construction or hull or anything. So I don't think there's an immediate effect on the premiums. There's one little funny thing that I can add is that all the insurance companies in London, Lloyd's and companies, they decided to accept those conditions of the Insurance Act. But some English-based P&I clubs have taken their own view at the Insurance Act, and they still maintain parts of the Marine Insurance Act. That makes it more complicated. But as I say, I don't want to go too deeply in this today, but because for today, I just want you to know that there is a new act, that you have to be aware of it, that there are pitfalls, and if you don't do the right thing, you have a major problem on the financial side of your company. All right, I think that is it for the moment. I hope that you found it an interesting webinar, and I think it's time to close. If you